Hello everyone, welcome to webinar 3 of the Investment Readiness series. Today we'll be talking about selecting the right investor. So we're going to explore different types of funding that startups can raise in Europe to help grow and scale their business and to see what works best for you. Specifically, we'll focus on public grants and private investments and how to select the right one. So public grants are non-repayable funds that are given to startups by government bodies, nonprofit organizations, or other entities. And public grants in the aerospace sector are usually offered specifically to support research and innovation, or research and development, and or the commercialization of such research and development results, right? And unlike private investments, public grants mostly don't require you to give up equity in your company, but they do come with specific requirements like meeting certain milestones or goals, although these should usually in any case be in line with your strategy anyway. Private investments, on the other hand, are funds raised from private investors, such as angel investors or venture capitalists, and these funds are typically used to help earlier stage companies get off the ground and fund their operations until they start earning some significant revenues. Private investment can come in various forms, could be direct equity financing, could be venture debt financing, but essentially the investment is given in exchange for ownership or interest in the company. And one of the primary differences between private investments and public grants is the speed at which the funds can be raised. So private investments can be very quick, could be a couple of weeks in some edge cases, while public grants take a significantly longer time. Could be a couple of months, could be up to a year. So it depends on the amount of time and effort that you can spend on raising funds. If you have time, you might consider doing a public grant proposal. If you have less time, you go for the private investment. Another key difference is the level of control that the founders retain over their company, right? So with public grants, founders and early investors, they maintain more control and more, let's say, influence on the direction of the company because they are not giving up any equity, they're not giving up any board seats or other ways that investors can exercise control. If you go for private investments, you are giving up a portion of your company, you are maybe giving up a board seat, and this limits in a way your control over the direction of your business. So in this webinar, we'll explore the various strategies that you can use to fund your development and operations in order to select the best investor. First, we'll have a look at European grants. You can refer to webinar 2 for more details on which grants exist and how to apply to them. But European Commission grants can be a valuable source of funding for startups and other organizations, but securing them is quite hard. It's a challenge. And one of the biggest challenges in securing a European Commission grant is the competition. So the Commission receives thousands of applications each year, and the competition for funding is really fierce. So as a result, applicants really need to demonstrate a clear and compelling need for the funding and a well thought out plan on how to use it to achieve their objectives. Just some numbers: in January 2023, almost 5,000 grants were signed for Horizon Europe, and the success rate was just over 16%. So many excellent proposals get turned away, even though the situation is a little better than Horizon 2020, where the success rate was about 12%. Another factor that makes applying to a European Commission grant is a challenge is the complexity of the application process. So it's a very time-consuming process. It requires a significant amount of paperwork, of documentation, and applicants must carefully follow the guidelines and the instructions provided by the Commission to ensure that they have all the necessary information and materials before they submit their application. So generally, proposal writing is kind of like a skill that you develop over time. And if you're doing this for the first time, it maybe makes sense to take on the help of experts and consultants to help guide you along the way. Also, the Commission has strict eligibility criteria that must be met for an application to be considered. So these criteria include factors such as the type of organization that's applying, the location of the project's objectives, and it's really important for applicants to thoroughly review the eligibility criteria before you apply to ensure that you meet all of them in order not to waste your time. And another challenge in applying for a European Commission grant is to demonstrate the impact of the proposed project. The Commission is looking for projects that will have significant impact on society, on the economy, on the environment, and applicants must be able to demonstrate how your project will address a specific problem or need and the potential impact it will have if successful. Applicants must also have the expertise and experience needed to successfully execute the proposed project to achieve its objectives, and the Commission requires a deep understanding of the subject matter and the field in which the applicant is working. So applicants must really demonstrate that they have the experience in managing this complex project and also to kind of show like a track record of success in their field, which could be a challenge for more earlier stage startups. In the end, public grants is a relatively long and workload intensive process that ultimately has a relatively low success rate. But it may be worth a chance, especially as it could enable you not to give up any equity or control and simultaneously raise a significant amount of money. Furthermore, also your success on the private market is heavily dependent on the amount of traction that you have with customers, if any. And for high-tech products or services that require kind of a significant upfront investment prior to commercialization and prior to traction, grants are maybe a suitable way to go because the investors, the private investors, are probably less likely to be convinced of your business case at this early stage. All right, now on to selecting the right private investor. So having a good fit with your investor is really critical. Everybody, for example, seems to love venture capital, but is it really the right fit for your company? What about incubators? I mean, each investor has their own particular goals, their own attributes, so it's really important to assess fit. Good practices do not accept money from strangers, from the first eager investor. Your investors are your partners. They bring in much more than just cash. They bring in experience, the network. And in order to set up the company for success, you need to do a lot of work to optimize the conditions for success, which includes selecting the right stakeholders from the start. So don't take money from the first eager investor. Take your time to explore your options. Make sure that whoever you step into the boat with is a good match. And the best fundraisers also are proactive and not reactive. So they are proactively looking for the right match and not just reacting to people reaching out to them. Venture capital is something that you should maybe consider avoiding altogether unless you maybe absolutely need it. Venture capital comes at a price in the form of a big chunk of your company. And ironically, the less you sell of your company, the less invested the investor is. Of course, they have less skin in the game if the amount of the company that they own is relatively small. So you have to be ready also to part with a significant part of your company. You're not just raising money, you're selling ownership. So on top of that, VCs will often impose certain controls on what you can and cannot do without their approval. Potentially, they may even invest ownership of your own shares over time to align your interests with their interests. And most often they will demand board representation. So ask yourself, is your business at a stage where it makes sense to raise venture capital money? And if you can really put it to good use, or could you maybe consider self-funding your growth? Or could you consider applying to public grants instead? If you do end up choosing venture capital, you make sure to pick the right VC investors by doing your own due diligence. VCs obviously do their due diligence whenever they invest in a company. You should do the same when you are getting invested in. Basically, you're getting into a long-term relationship with your investor, so you should do your homework just like they do. Maybe talk to portfolio companies, the CEOs of the portfolio company, CFOs, maybe ex-associates, former partners. Get some honest references. Think about things like, what's their fund size, how much has already been invested, how much will they keep on hand for you and your later rounds? Do they even invest in follow-up rounds or not? What's their definition of success? Is it 2x? Is it 10x? And make sure you talk to their failed ventures and the founders of those failed ventures to see how it went for them. What's their story? And make sure you really understand who it is that you're getting into the boat with. So overall, don't rush the process. Take your time in finding an investor that has the same kind of values, the same kind of goals as you do. Do your homework just like they do, and find someone who can take your business to the next stage and the stage beyond that. Overall, it's difficult. It's a tricky thing to find the right investor, to have the right investment strategy, and it takes a lot of time and effort. And that time and effort is maybe better spent on developing your product, on working on your sales. So we at Evenflow can help you develop your investment strategy, to select the right investor, to make the introductions. We have a big network specifically within the space industry. So if this is something that you are interested in, please feel free to reach out to us. We're happy to have a chat. Otherwise, thanks for watching and see you in episode 4.